All right, welcome everyone. What's up, guys? What's up? All right, welcome everyone. Let's get started. So, as you guys can clearly see on the title here, we're going to talk about the CPI report for the month of August that's coming out tomorrow morning. Bring down the music here. So, with inflation report coming out tomorrow, there's kind of a lot that we need to be expecting, but at the same time, again, the markets are becoming extremely desensitized to economic reports like inflation because it's been just trudging lower and lower month over month towards the Federal Reserve's 2% target. So, now that the headline and core inflation data is kind of at lows here compared to last year's highs at 9.1%. There's probably a good chance that we might see a little bit of a, I guess, quote unquote bounce in the inflation data tomorrow, just because of the fact that we've been seeing energy prices sustaining their highs and especially after reversing from lows in the middle of summer. And that could be a key metric for us to be looking at for the rest of the year, because if energy prices continue to stay at these highs, it won't be good for inflation. And that's kind of the only, I guess, major metric that needs to go down, the major metric to go down for inflation to really hit the Federal Reserve's 2% target. And I think that's another reason why a lot of people are skeptical on the Federal Reserve's 2% headline inflation target, and just overall, not just headline inflation, but core inflation as well. So, if we do see a little pop tomorrow in inflation due to the fact that we've been seeing higher energy prices as well, the market can react badly tomorrow. We've been seeing some late day selling in the big tech names, and remember, the small group of big tech names, again, that's kind of an oxymoron there. The small group of big tech names have been leading this rally off of the recent lows on SPY. So if you guys take a look here, my apologies, guys. Get back to the daily here. So with this recent low that was put in here, all the major, big tech names were able to push this rally to the upside. We formed kind of a nice V-shaped recovery here, and then we pull back for the start of for the month of September, since September seasonality is very, very volatile. So with that key, I guess, historical average in mind of what happens during the month of September, it's a lot of seesaw action. I'm expecting to see some type of a larger continuous move to the downside tomorrow, just because of the fact that, again, with SPY, we hit that upper range in the beginning of September at this descending level of resistance, and we've also hit that lower range at this descending level of support or descending support trend line back in middle of August. So with that in mind, you guys have to think about or at least be open to the possibility that since September tends to be historically volatile, and actually specifically both longs and shorts tend to win in September really well. So if that is indeed the case, that means this technical chart pattern that I'm looking at right now, this very, very large macro bull flag that we have currently been forming, or if we take a look on the weekly time frame, a huge macro cup and handle chart pattern, you guys can see that this right here will make sense, especially if this is a handle that we're looking at in the overall weekly cup and handle. Because again, there's only two types of handles here in cup and handles. All right, if you guys didn't know this, right? So number one, we have the flat handle that's a part of the cup and handle, and that's when we have a flat top and a flat bottom. And then we have what we call a slanted handle, where we have either a descending channel like this or a falling wedge that forms as well. So basically, it's when the cup has formed fully and then the price starts to consolidate, creating that handle part of the overall cup and handle chart pattern. So again, we have two different types of handles. One that's a flat handle, and two that's slanted handle, which can be consisted of a micro descending channel like we see here, or a descending, or excuse me, a falling wedge. Okay, so those are the two types of handles that the cup and handle chart pattern can have. And so in our case here, SPY is currently really just sticking to the parameters set up by this descending channel, or this slanted handle that's a part of the macro cup and handle chart pattern. So what this could mean is that we could get a price action, I guess, path that looks something like this. Okay, so far, right, we did exactly the right thing here, right? We retested the highs here and then bounced off of the lows at that descending support trend line, came back to retest the highs again, the upper range, and now we are currently experiencing lower highs now. And so if this occurs, we can see something like this. Okay, and all the way into the middle of October, and it will make sense. And why would it make sense? Well, number one, again, if you guys have been following me on Instagram or just following what I'm saying here on YouTube on all my lives, you guys should understand that with September seasonality gone, October should provide us with a nice little bounce and then consolidation, and then sometime near the end of October or maybe even early November, we can see the actual official reversal back to the upside to restart the bull market uptrend that we've been seeing for this entire year. And again, I just want to give you guys my little I guess credentials on what I'm saying here. So SPY, like I've been saying since late last year and even just last year, 2023 to 2026 we're going to be the opportunities, right? Because the market won't be crashing. And guess what? The market didn't crash on October lows, the market didn't crash in December lows, and then once we hit January of this year, we rocketed higher. Okay, so that is the evidence that I have to support my claim that September can potentially play out like this, and we can potentially bottom out in October as we consolidate from early to mid-October, and then somewhere around late to early November. I'm personally leaning more towards early November, but who knows, right? We can't predict the future 100% of the time, or we can't be 100% correct. I guess that's the better statement there. There is, a good chance that we can see definitely some sort of bottom happening around October, because again, we're transitioning from quarter 3 to quarter 4, and during pre-election years, quarter 4 tends to be one of the best performing years, or at least minimum, we tend to see a continuous run up to the upside once more, especially after we've had such successful quarters of quarter 1 and quarter 2. And again, I said this even before quarter 3 started, okay, and that was back in July, that quarter 3 tends to be one of the worst performing and one of the most, boring, I guess, quote unquote boring quarter here because we're not seeing continuous moves to the upside. But again, quarter three provides us with a great amount of consolidation. So if we do see something like this will be such a perfect consolidation for us. And also it's going to be setting us up for another run up higher once we bottom out in October and into quarter four and all the way up into the end of the year. Okay, so CPI, all right, okay, so this is kind of what I said. This is the reason why I've been saying all of this right now. Okay, all that macro perspective stuff. So let's come back to CPI here. So for CPI, if we do see a bump, and also right now, if you guys didn't know, the expectations for August inflation data is that we're about to see a 3.6% increase in inflation from year ago levels. And also, mind you guys, 3.6% for the expectation is higher than the month of July's, because month of July was 3.2% for headline inflation. Okay, but again, you guys have to remember, this is still a lot lower compared to the peak that we had in last summer, midsummer, of 9.1%. So, 3.6% increase is not that big. All right, as long as, I would say personally, as long as we don't cross over 4%, we're good. But the markets always tend to overreact, especially on, a little tiny jump in inflation like this, right? Because, oh my God, if we jumped 0.4% from July, big news, whoop-de-whoop, right? But, if you were to play into that overreaction, it will be, in a macro perspective, good for the markets, because that means the market will start hitting, or the seasonality will be kicking in for September after CPI report comes out tomorrow morning. Right, remember, the CPI report comes out before the market opens, a full hour before. So 5:30 a.m. Pacific Standard Time or 8 a.m. Eastern Standard Time. Okay, 8:30, excuse me. It's 5:30 and 8:30. So a full hour before the market opens. So, a lot can happen before the market opens, especially in between that 1 hour quote unquote grace period once the CPI inflation report comes out. But again, I'm fully expecting the markets to see the September seasonality kicking in for CPI. But there is a slight possibility. Okay, there's a slight possibility that the Federal Reserve meeting, right, the FOMC meeting that is coming to us next week on the 19th through 20th, because again, remember, the FOMC meeting takes place for 2 days, and then on the last day, the second day, is when they announce the rate change, or maybe even the pause this month, and we're going to have the conference with Jerome Powell, and whatever he says will definitely move the markets. So there is a chance that we can actually see one last pump into the end of this week, because again, we also have OPEX, right? So we have a lot of catalysts this week that can really make the last half of this week very, very volatile. So starting from tomorrow and into Friday, we can have a complete whipsaw, seesaw type of action where both calls and puts can really benefit. So definitely be on watch for that, especially lower your risk levels, your risk exposure levels, and also lower your positions as well. And if you guys are going to trade, make sure you guys are looking to day trade or scalp, especially if we do see an increase in volatility. And that should bring me to the VIX. Okay, so the volatility S&P 500 index has seen a little jump today. All right, but we're still staying underneath that 15 value here, the number value of 15, and that's a good sign. So whenever the VIX is constantly getting pushed down and smacked down below 15, that's good. But if we start heading back up, back to the 15 number there, or that value, that's going to spell some problem for us. Okay, and that if that does occur, then SPY at that point, I'll be expecting SPY to rapidly start moving to the downside and possibly hit this 444 or 444 whole number level once more. But again, This all is everything that I'm saying right now is predicated on the fact that the markets do move down tomorrow based off of the August inflation data. All right. So again, there are a plethora of possibilities that we can discuss about CPI and FOMC and how the Federal Reserve might react to tomorrow's incoming inflation data. But at this point, there's no really use speculating what can happen, all these different probabilities. It's good to have a good idea of what can happen and what the Federal Reserve might do after seeing this report, because again, we're expecting a slight jump from July's headline inflation data of 3.2% to August of 3.6%. So that's the expected number. So if you do hit expectations, if you are in line with expectations, that can still move the markets down, because again, we've had that very small 0.4% increase from the month of July. So, either way, today's action was kind of telling. Obviously, again, the markets kind of just sold off because everyone was starting to sell, trying to lose the amount of risk that they have heading into CPI tomorrow morning pre-market, and obviously the big tech names were a huge sign today as well when everything pumped and then they just sold off right and late into mid to late day today in the session. So there is a good chance that we can see a continuation of that tomorrow, but it all depends on how we react to the data pre-market. Right? So that's something that no one can predict. Okay, but so far today's action is a little bit kind of pointing the probability of us moving lower tomorrow and then possibly bouncing into OPEX at the end of this week. But overall, this week I'm completely expecting a red week. Okay, so far we've been keeping a nice inside weekly candlestick, but again, the amount of volatility that we're about to have can make this just plummet down, and obviously follow this kind of price action path that I've drawn out for you guys, that also again is conforming to the parameters set up by these two descending trend lines here. There's resistance and support trend lines. So again, I ideally, to be honest, macro perspective, I would want the price to do this. All right, because it's going to be perfect heading into October, okay, and it'll be setting us up for that Q4 bounce and into the rally, the year-end rally, into 2024. So this is exactly what I'm expecting, or ideally expecting at most. But again, it's speculation because everything can change tomorrow morning and into OPEX and into the FOMC meeting as well for September. So it all depends on how we react tomorrow. And again, I'm slightly leaning bearish just because of the fact that the big tech names that have been leading the market so far for the past 2.5 weeks here, including this week, decided to sell off today hard, and they weren't able to hold in their gains today as well. So for example, Tesla, right? I even mentioned this to my members as well. Tesla, I felt that today that a lot of the tech names today were just pumping. I even mentioned that very early in the morning. I sent that message in my private CFO Discord chat room. I felt like something was off here. And guess what? We ended the day red. And Tesla with an inverted hammer candlestick. Apple looking absolutely ugly after their conference because, again, sell the news. But at the same time, it wasn't just these names that had catalysts. We had names like Microsoft ending up really, really badly compared to yesterday. And Amazon as well, even though Amazon held up a lot better thanks to the breakout yesterday, heading back into the 2022 lows here of 143 to 144. That's what I believe. So yes, so around here. So, or actually not even 2022 lows. I think that's 2021 lows. Yeah, 2021 and 2020 lows here for Amazon. So it definitely makes sense that Amazon was a lot stronger compared to the other big tech names. But again, overall, that entire small group of big tech names had that mid to late day sell-off. So that's obviously something to take precaution for tomorrow morning, um, especially if the markets decide to sell off of that 0.4% increase in headline inflation. If we do come in line with expectations of 3.6% tomorrow for August headline CPI inflation. That was a mouthful. But hey, what's up, guys? Let's see if we can get to 4 likes today. 5 likes. Let's see. But yeah, that's kind of what I had to say for you guys tonight. I mean, again, there kind of is no point in trying to look at charts tonight because, again, it can be completely invalidated by tomorrow morning when the market opens, literally. So you guys should definitely try not to focus too much on specific chart patterns, but definitely keep your eyes on chart patterns that do matter to you guys. And we're keeping an eye on some with especially the early relative strength names, and obviously the names from the newsletter as well for this week. But overall, yeah, I mean, if you guys have any questions, please let me know in the live chat room. Oh, 5 likes. Oh, thank you guys. Thank you. It really helps with the algorithm. Let's keep it going. So for all the people just joining in, let me give you guys a brief summary before I end here. So tomorrow, okay, August's CPI report comes out, and we're expecting, and all the banks are expecting, all the analysts are expecting a jump from July's CPI data. That makes sense, right? We've been going down for I don't know how long, but month over month we've been going down every single month since that peak in 9.1% last year, midsummer. So obviously we're far away from that 9.1% right now, and 0.4% increase doesn't seem too much compared to the increase that we saw last year in inflation, and even last year too. So from 3.2%, which was July's inflation report, and a potential jump to 3.6% doesn't seem like too much, right? However, the market tends to overreact. And that's the reason why I believe that because of those expectations, right, the expected number of a jump of 3.6%, we saw that mid to late day sell-off, especially again, and just logically speaking, guys, people tend to unload their positions before CPI, especially when we're about to have an increase in the inflation data, when we've been having constant month over month decrease in that inflation data. So, I digress here. There's a plethora of possibilities that can happen tomorrow, but for me personally, I think there's a good chance that we can gap down tomorrow morning based on what we can see. Because again, whatever increase it is that we see tomorrow from July to August, the markets will react because again, the Federal Reserve has been pushing this narrative of having inflation come down to the 2% target. Now, everyone has been skeptical about that. People are saying that the Federal Reserve should just keep a more quote-unquote realistic goal of at least 3.5 to 4% as their inflation target, which means we've already made that target. But I've also been seeing people saying that we should just keep it at a solid 3% target because we're never going to reach 2%. But I mean, who knows, right? Even the Federal Reserve, again, is still going through their actions data by data. So that's the reason why the last 2 JOLTS reports, right, the job openings data, which again has been showing great cracks in strength, right? Because the labor market has been very, very tight and strong, and they don't want that. They want the labor market to ease up, and we're finally seeing some very, very good big signs that the labor market is easing up. However, with inflation popping up tomorrow, that might scare the market slightly. Again, the bond market, the futures funds, the federal funds futures market, another mouthful to say, federal funds futures market, and they have been pricing in that the FOMC meeting, the most recent one that we're about to have, which takes place next week. Make sure you guys mark this on your calendars, 19th to 20th. They're saying, right, the market has been saying and pricing in that the Federal Reserve might be pausing, but who knows, right? Depending on the inflation report tomorrow. That can all change, right? That entire probability that the federal funds futures market is pricing in right now can completely change right before the FOMC meeting occurs. Okay, and the entire sentiment can change as well, right? And again, that plays perfectly into September's seasonality trend. And what is that seasonality trend? Let's say it all together, guys. Volatility, right? And plus, a little side note, September tends to be a great month for both longs and puts, right? Longs and shorts, or calls and puts. So that is saying something there, right? That's saying something. And that should tell you that September is full of what, guys? Volatility. Okay. So again, that's going to be a perfect recipe for SPY to follow this price path that I've drawn here. And I've drawn this trend line 2 weeks ago for my private members. And so far, we've been really hitting it really well. So, we've hit this trend line here at the beginning of September. And I even told everyone, to you guys on Instagram as well, and even on YouTube live stream as well, that I'm totally expecting September, the first day of September, to be red. And guess what we got? We got a red day for the first day of September, and after that, we saw a continuous move down. All right. So tomorrow, I am expecting us to hit $444. Okay, this whole number level, and potentially, if we do break down, that means we're going to make this yesterday's previous high today our next second lower high point compared to this one right here. And then this will be officially a lower high point if we break below the low of this candlestick last Thursday. Okay, so what that's going to look like is this. Okay, whoops, it's right here. Okay, so let me just draw you guys a mini path here. So it's going to look something like this. Right? So it's not going to be exactly like this, because again, it all depends on CPI, but this is what I'm expecting. Right? And this should be overall following this general macro perspective path of this consolidation in the markets. And to kind of end this summary off here, I know I kind of went off a tangent. This should completely play into the fact that we're about to transition from quarter 3 to quarter 4 once September ends, and we're going to October. And somewhere between early to mid-October, we're going to find a bottom, and we're going to start consolidating. And then somewhere around late October to early November, we're going to get that actual bounce, that official bounce that will start off the end of the year rally to the upside. I've been seeing a bunch of people on FinTwit, or FinX, I guess I should say, since it's now called X, saying that we're not going to have an end of the year rally. And those are the same type of people who have completely missed out on this entire year rally. And also, those are the same type of people who have been saying that the market was going to crash in late December and in late October, okay, or the October lows or December lows. Guess what? We didn't have any of that occur on both occasions. And for them to say that, we're not going to have an end of the year rally, and this potential trend here, what I've drawn here, is going to lead into a market correction of 10% or 20%, is ludicrous, okay? Because again, the market has been doing this, okay? All right, let me just take out all my drawings here and all my lines. The market has been doing this, okay? Straight up. All right, so how can you be bearish on this? Okay, so again, I think that's completely hogwash. It's again, I don't know what they're looking at, but the markets are going to stay true here. It's going to tell us what the future is going to be, okay? Because right now, as you guys should already know, the market is constantly discounting any future catalysts, right? And it's perceiving what the future can be with this current price action. So, with SPY here, again, just be cautious tomorrow. lower your risk exposure on any single position. And if you guys are going to be trading, make sure you guys stick to day trades or scalps. All right, or just long-term positions that you guys have. All right. Okay, so that is it for tonight, guys. Stay safe tomorrow. There's a lot of possibilities. I've discussed it tonight, but I try to keep it to at least one to two different scenarios. Again, we can be crashing tomorrow and then bouncing right into OPEX, right? Triple witching. If you guys didn't know, Friday is triple witching for options expiration, OPEX. If we do rally into the end of the week, I'm still going to be expecting a red week overall. Right now, we're looking at a nice little inside weekly candlestick. If we do decide to make new lows, and if we break below last week's lows, which was last Friday's lows right here, then it'll be perfect for this overall macro price trend or price path that I've drawn, which you guys should have on your charts as well by now.